Hello and welcome to the Taylor Trades Options channel. Today's video is on common option trading mistakes and how to avoid them. This will also be followed up with another video of me dissecting through some of my top mistakes and losses. The aim is for you to learn through me to avoid these bad trading errors and prevent capital loss in your own portfolio, especially when you're starting out. So here it goes. Common mistake number 1. Getting assigned. If your strategy is not to get assigned, then try and avoid this one at all costs. Firstly, as an option seller, you have no control over assignment. For every one contract you sell, you will be assigned 100 shares long or short. Generally, the risk of assignment increases the closer you get to expiration. As an option buyer, you can choose when to exercise this. One other point to bear in mind is if the stock has a dividend, you may also be assigned and also have to pay the dividend. The rule is if the extrinsic value of an in-the-money short call is less than the dividend amount, the in-the-money call owner will have good reason and benefit to exercise that option so they can realize that dividend. And you will end up paying for that dividend and be short 100 shares. And there may also be an assignment fee as well. Also, being assigned takes up capital and could cause the broker to margin call you, and they may close other positions to free up some cash in your account. Common mistake number 2, going too big, either on one idea or on one stock symbol. Firstly, you need to work out what is too big. Personally, for me, a position that takes more than 5% of my capital is too large. It is easy to get caught up in taking larger risk, especially if you've had a winning streak. As your account gets larger, it's okay to increase in size, but stay within your 5%. And if you are just starting out, get some runs up on the board first. Maybe put your max protection as 2 to 3%. It's a marathon, so stay committed to the journey and don't let one position blow your account up. Common mistake number 3, selling or buying protection during a correction. What I specifically mean is selling naked calls or buying puts once a sell-off has occurred. In the market, a 10% correction happens on average every 11 months. So make sure you already have a hedge in place for when it does happen. Otherwise, one of 3 things will happen. Firstly, you'll do nothing, you'll eat your losses and lose capital, you'll get assigned, margin call, things can get very messy. Second option is you buy protection during the move, so you've already lost a little bit and now you're buying expensive protection now that volatility is high. Secondly, you buy protection during the move, so you've already lost a little bit, now buying expensive protection now that the volatility is high. Or you'll wait until you can't stomach it anymore. Red day after red days, all positions are getting hammered. You then buy some protection only for the market to bounce. Learn to hedge correctly. Reduce risks, take off winners, reduce position sizes accordingly when corrections happen. Common mistake number 4, selling naked call options, especially if there has been a correction. This excludes covered calls in which you sell a call or calls to the equivalent amount of the underlying. If you are going to sell a call, make sure you have good fundamentals and trust in your stop loss. There's no point getting caught up, shorting and selling a call and then hoping that stock to go down. If you'd have done this across some of the big stocks over the years, Tesla, Apple, Amazon, Facebook, Shopify, Microsoft, over the years these have continued to go higher and higher. And if you were looking at this as a trading idea, then it would have been very, very hard for you to make money and you could rack up some substantial losses over the years of trying to adjust and roll and hedge, etc., etc. I would strongly advise you not to sell naked calls on options, especially with some of the big names out there. So these are 4 common mistakes in options trading. I'm sure some of this may be relatable. For the new traders, I hope you can take some of this information on board. I will follow this up with another video of my top 10 worst trades, mainly to have a bit of a chuckle, but also you can see how things can go bad pretty quickly. So stay tuned in for that one. As always, I wish you the best with your trading. If you found this useful, then please like and subscribe, and don't be afraid to comment. And I will see you in the next one.